Hey guys, and welcome to our second video about the book One Up on Wall Street by Peter Lynch. Well, in our last video we said that Peter Lynch believes that the amateur investor has an advantage over the Wall Street professional. Well, you might ask yourself, why the hell should I be better than a professional fund manager with an education from an Ivy League university and years of experience on Wall Street? Well, imagine Bill is a fund manager of a big mutual fund, and he buys shares of a new, fast-growing company. Well, unfortunately, the company gets into short-term trouble and the shares do not perform well the following month. So at the end of the year, Bill's boss, John, looks at the fund and recognizes that it underperformed relative to the market index. So John takes a closer look at the titles, and he bashes Bill for his investments in such small and unknown companies. But John doesn't say anything about the underperformance of the other shares of well-known companies such as Nestle or Coca-Cola. Well, now what do you think Bill is going to buy in the future? He definitely will never ever buy shares of small and yet unheard companies anymore, although they might be a better investment than big conglomerates. The truth is that he is more likely to keep his job by slightly underperforming the market index with shares of large and well-known companies than by outperforming the market with shares of small, fast-growing companies which fluctuate heavily though. Furthermore, Wall Street analysts tend to look only at things such as current and next quarter sales and earnings, but completely forget about the broad picture. Do people like their products? Do they offer great value to the customers? Are there close substitutes? Is the brand reputation still intact? Is there great culture in the company? To answer questions like these, it is much more valuable to have a real insight in the company or in the industry. You could have this insight because you work in this company or in the industry, or because you are a happy customer who experienced a great service. It all comes down to one major principle: invest in what you know. Only then you have a chance to outperform by finding tomorrow's big winners. And that's why Peter Lynch tries to continue to think as an amateur as frequently as possible.